This is Rod Kusanen, Spooman for Risk on October 8th, Thursday, 2009. All times in the video are referring to Central Standard Time. And once again, our discussion today is going to revolve around the predictive power of the premium. If you don't know how to read the premium, go to our website, RSKsys.com. The rules for reading the premium are for public examination. You had two beautiful setups from the premium today. Notice when the premium hit, when the Spoos hit the early morning high at 8:45, you had a simultaneous new low on the NASDAQ premium. According to the premium rules, when that kind of pattern appears, new highs associated with new lows on the premium immediately short the market. You don't even need an indicator other than the premium. Short it. It's going down. Down it went. As we had new lows on the premium thereafter, such as here and on both the S&P, the ES, and the NASDAQ premium, you knew the Spoos were very likely going to go lower. They did. However, that was your signal also to look for a long trade. Use whatever indicator you want. Look to go long. Why? Because today was a very special pattern that came off of yesterday's market activity. The pattern is referred to as an INNY pattern. That's what we call it. INNY. INNY, like the first inning, except no ING. INNY pattern. Now, what's an INNY pattern? I'm not going to tell you. That's confidential information. But for our members, they know what an INNY pattern is. Oh, can't tell you anymore. Because today was the follow-through of an INNY pattern that developed yesterday, there was better than a 65% probability that today would rally. That's based upon the INNY pattern. If you don't know what that is and you want to know, we'd suggest you take our course. But our traders expected the rally because today was the follow-up of an INNY pattern that developed yesterday. Now, it did rally, but ultimately the market began to sell off. Now, while it did sell off, it attempted a rally thereafter, and that rally continued to fail. Now, I want you to look extremely carefully at this bar on the premium. I'm going to just make this as clear as I can. Alright, that's about as much resolution as we can give it. Okay, market is beginning to rally here. We're expecting the market to try and attempt a new high for the day. That would have been the typical pattern. But notice what happens right here. Okay, that's the bar. While it's going up, this bar on the premium is coming down. Again, I'm going to expand this, make it a little bit more clear. Okay. You see what happened there? This bar on the Spoos is going up, but this bar on the premium is clearly going in the other direction. Now, while it didn't constitute a new low for the day, the market direction of that premium bar was highly predictive, indicating that the rally was over and this market was going to tank. And that's exactly what it did. Now we had other confirming data that showed that there was weakness going up. And notice this is at 14:25 Central Standard Time. Now look at the tick. This is the tick. Charting it on a 25 tick bar chart using our group reversal system. At 14:25, when the tick hit this high, the value was negative. This based upon our group reversal system. Here it's positive, here it's negative. A yellow means a negative MACD. It's also divergent on the DPO. More than enough information to know that there's no strength to this move up and the market's ready to go down. You add that with what just happened to the premium, and we had no other choice but to cancel any further buys in anticipation of a future rally. We got out immediately at that time. If you don't believe me, take a look. At that particular moment, we had just been averaging in for a final attempted rally to the new high for the day, and as you can see, we got out immediately there because of the reasons just described. And here's a few other examples of successful trades that we took today. Off the high, we shorted it big, took some profits, shorted it some more, took some profits, more profits, shorted it again here, ultimately got out here, went back in, continued to short it on the way down. Okay. Now, on just one final note, something very interesting about this chart. This chart is a 25 tick bar chart. Okay, this is a tick bar. But notice what we're doing. We're plotting a stochastic from a 500 ES tick bar, a stochastic from the tick, a 100 tick, a 180 SPD, and a 4-tick VIX chart, and we're placing it all on a TradeStation 25 ES tick bar. Any of you who are into programming are probably wondering, how the heck did we do that? Well, come to RSKsys.com, order a demo. We'll be happy to show you. This is Rod Kusin and Spooman for Risk.